only CPAs, that's all we invited, for this very special short presentation by Bob Panoff on what has just changed with regard to undisclosed foreign accounts. And I think you'll find that a lot of it has changed, and I think you're going to find that Bob Panoff gives you some very good information and advice here. Bob is a board-certified tax lawyer. He graduated from Brandeis University and then got a tax degree and a master's degree in tax from the University of Miami, and I invited him anyway. He's an ex-chair of the tax section of the Florida Bar, and really a very wonderful and efficient and straightforward go-to person when clients have civil and criminal tax issues. Bob's helped a lot of our clients in a lot of really phenomenal ways. So Bob, I'm pleased to introduce you here, and I'm just going to let you take it away.
All right, thank you, and good evening, those of you trapped by tax season. I'm going to try to make this brief and useful to you. The 2011 OBDI came into being in February. There are FAQs issued with respect to it. It is a somewhat updated version of the Voluntary Disclosure Initiative that came out in 2009. Of particular interest to you during the preparation season is FAQ, frequently asked question number 47, which states, I have a client who may be eligible to make a voluntary disclosure. What are my responsibilities to my client under Circular 230? And there's an answer which I'm not going to read because you all can read it yourself, but I will read a little bit of it at the end. Circular 230 requires the practitioner to advise the client of the fact of the client's noncompliance and the consequences of the client's noncompliance. A practitioner whose client declines to make full disclosure of the existence of or any taxable income from a foreign financial account during a taxable year may not prepare the client's income tax return for that year without being in violation of Circular 230. Now, what I'm going to talk to you about is your potential exposure and some rules that apply to you in this context, and a little bit about the type of client we're dealing with here. On television, white-collar criminals are always somewhat obvious, but in real life, they tend to be charming, manipulative, and easy to get along with and understand where the nooks and crannies and cracks are that they can utilize to take positions. And they also understand how to place their accountant in between the black, the gray, and the white, so that if things are detected, that accountant is either a defense or a co-conspirator. And why is that relevant? It's relevant because that can be utilized if things are detected from a criminal point of view. So let me go over a few rules here that apply. First is these people live in the land of the recalcitrant, particularly the ones now, since they haven't come forward under the 2003 Offshore Voluntary Compliance Initiative of the 2009 program. So what we have left on the continuum of human behavior is people that are not only used to lying, but they're used to lying on their return and reporting forms despite all of the publicity that these programs have received. So they will not have any difficulty maintaining a position of not being truthful with their accountant, since they are mentally able to lie to one of the greatest powers on this planet from a collection and enforcement point of view, the Internal Revenue Service. So first, when you're sitting there, keep in mind that if they happen to bring it up, say they lived on Mars and they do bring it up, the first thing you need to do is shut down the conversation, because under Section 7525 of the Internal Revenue Code, your privilege as an accountant is limited to tax planning. It's not available for tax preparation, and it's not available in a criminal matter. So you should shut down that conversation and refer it to counsel at that time, and strongly recommend it that they do so, and cover yourself by perhaps having them sign something, or you giving them something, or calling in one of your support staff or your partner since they've already let it out of the box, it's not privileged the fact the moment they mention it. So, but just to be able to have something to prove that you did the right thing and make a contemporaneous memo for your file concerning it. What if it's a long-term client, you have a relationship with them, you don't do anything? It's been a little more than a year, you knew about the foreign account, or you suspected it and didn't do anything. That can be considered willful blindness for criminal purposes. Well, Circular 230 is the least of your worries, because if you know and you don't do anything, you're aiding and abetting a false statement under subsection 7206-2, the 3-year felony provision of the Internal Revenue Code, and you don't want to do that. That doesn't make any sense, because you're exposing your license for the person. And you're also, if you aided and abetted the failure to file the foreign bank account report, because it involves that, it's a Title 31 felony in addition, which is separate and apart from the Internal Revenue Code felony. Also, it's Title 18, Section 371, conspiracy for tax evasion or conspiracy to commit a false statement. So the exposure is significant. And where's the evidence going to come from? Well, the evidence is generally going to come from the client, because if the client's detected, once again, criminally, then the client's going to go to a defense counsel, and the defense counsel is going to evaluate, among other things, what's there in terms of providing substantial assistance to the investigator and the prosecution. And the role of the accountant is always reviewed in detail. So the evidence would, in a case where, for instance, it's a foreign bank account that's discovered, and that's happening more and more, be from the client. And why is it happening more and more? 14,700 taxpayers came forward under the 2009 program. More than 3,000 additional ones came forward since October 15th, 2009, when it ended. So there is a database now of more than 17,700 files that contain the who, what, where, when, and how of the foreign bank account and other offshore assets that the government has in its possession, in which they have collated into a searchable computer database, which means that it's an unprecedented amount of reliable evidence concerning financial institutions, offshore people, including attorneys, accountants, and money managers, onshore people, if they were instrumental, etc. So the probability of detection with respect to this type of matter is increasing daily as they pursue those leads, and they are pursuing them. Many financial institutions offshore are now under investigation. Many people who are in a support role are under investigation. So when the client does come to someone in a privileged environment, they can advise them that to the extent they've been playing compliance lotto and they think they could win based on the odds as they calculated them previously, those odds are changing daily because of that database in terms of detection. And relying on that when the result of detection is catastrophic is not a wise decision. So the exposure to the accountant is severe. Of course, it's a Circular 230 violation. It's almost silly that that's there when the exposure is far greater than that. And of course, this type of violation where the practice is utilized to help someone conceal would result upon conviction in a loss of someone's license from the Office of Professional Responsibility. So what should you do to protect yourself? There's some simple things you can do. Many of you send, I'm sure, if not all of you, send out the information gathering document format to the clients, the organizer, the tax organizer. I don't know how many of you actually make sure it's filled out or utilize it. I know some clients are resistant. But there's one thing you probably should do and make sure it is. On the question, and I assume it has the question, and if it doesn't, it should, do you have a foreign bank account? Make sure they indicate yes or no on that particular question. Have something in writing for your file so that you can show. Now, of course, if they say no and you wink and a nod and you know that they actually do have a foreign bank account, then them signing something that says no is helpful, but if they have some way of showing that you knew, for instance, you meet with a married couple, and perhaps their adult son or whatever, and there's 3 words against your word, then there's still an issue there. So you can create protection by making sure that each of your clients signs something that indicates whether or not they have a foreign bank account in their tax organizer. If you want a separate statement, get a separate statement. If I was a practicing accountant, I would do that in today's compliance environment. And you certainly should do it on intake of new clients. And in closing, I'd like to stress that a person that's been lying to the government a long time doesn't have any problem lying to you. They will be charming. They may like you. But when it hits the fan, whose freedom do they want to be lost? Yours or theirs? And just keep that in mind and be very careful going forward on this kind of matter. And I think I've used enough of your time at this time of year. And Alan, that's it.
Bob, that was fantastic. I mean, I think that was really excellent. Do you recommend any kind of particular letter or phrasing of a letter to a client after a meeting that would say, pursuant to our meeting, you're going to get me the W-2, you're going to get me the 1099, and also we talked about the importance of making sure that any foreign assets and accounts are accounted for,
or I think that
something like that?
Once again, subject to local practice, etc., I can only say what I would do if I was practicing. I would inform all the clients, perhaps in a letter, that because of the increased enforcement in this area, and because of, I would actually mention, because of FAQ 47, and it's the answer to it in the recently released OVDI 2011, our firm has instituted a policy of obtaining a written response with respect to the question concerning foreign accounts. I don't see anything wrong with that, and someone honest, I don't think is going to be bothered by that. I think if someone balks at it, it's a red flag. Then there's, why are they balking at it? Are they a tax protester, which is another issue, or do they have one and they don't want to sign something because they don't want to say anything about it? I think it's a matter of, if you cast it in the context of an overall change in the way the Internal Revenue Service views these things, and that they have clearly fired a shot over the bow of accountants in this FAQ, that a client will understand it. An honest client will understand that why the firm has implemented a slight change in policy.
Bob, I just have one more question. How does it normally work when the client, I know is an estate planner, the client comes in and they go, you know, there's this house in India, and I don't know, my mom and dad, it's like they died or it's ancestral, I'm not sure exactly, but there's this house in India.
I think that you can't just stop at the house in India. A house in India generally means that there's some expenses to maintain the house, pay the cost of electricity, there could be your phone, there could be water, whatever the utility situation is in India, someone's paying something. So you can't just stop there and assume that there isn't more. I think it has to be pursued, whether it's India or the offshore in the islands, south and east of us, or wherever. And unless it's unimproved land, and unless local zoning doesn't require the unimproved land to be maintained, there's got to be some expenses somewhere being paid from something.
Okay. And then I guess just logically, the CPA with a real issue needs to call their own lawyer and not the client's lawyer, because I guess what the CPA tells the client's lawyer may not be privileged.
It's not privileged at all. Here's the defense attorney for the client, or depending where it starts off, but any competent attorney for the client knows that the first thing he or she has to do is evaluate the role of the accountant to determine the strategy going forward. That's done automatically by anybody competent. There's an inherent conflict. So although the accountant can certainly speak to that person, it's in their interest to listen, and it wouldn't be a bad idea to consult their own attorney. But if it's a brand new client, of course, and they haven't prepared anything yet, and they immediately send the person to counsel when they hear about it, there's no exposure. And if they document the fact that they made the referral, I mean, you can lead the horse to water, but you can't make the horse drink. So if they can document that they made the referral to counsel, then that's all they can do. But if it's an existing client where there's been preparation, they might want to talk to counsel just to evaluate what their file shows, et cetera. Now, under no circumstances should they destroy anything. That's not only tax obstruction under 7212, it's regular obstruction under Title 18. It's a felony. Arthur Anderson case is a perfect example of something like that, and that, of course, resulted in the firm ceasing to exist. So panic sometimes causes someone to react impulsively. That's the wrong thing to do. The right thing to do is stay calm, call someone who represents the accountant only, and talk to them.
And Bob, thanks for being there for us over the years when people have had urgent needs. You've always made yourself available. I don't know how you do it, but you're pretty amazing.
I'm cloned.
All right. Well, if anyone has any questions, please feel free to, I guess, send me an email in general terms, or call me or call Bob. Have a great tax return season. I'm going to do a little bit of advertising here tomorrow night at 5:30. Really more for your medical practice clients than you. We're going to have a little 30-minute talk on a checklist of paperwork to make sure that doctor offices have so they don't get booted out of Medicare with these surprise audits that are going on. Health consultant Jeff Howard's going to join me. We're going to have a very efficient list, and please feel free to have anyone join us. Also, we just released today from our law firm the regulations on the new accountable care organization rules that Medicare has proposed, which will allow organizations with primary care doctors servicing over 5,000 patients to capture 1/2 or 60% of what Medicare saves on the patient base. So that's a big, big financial incentive. The governmental report estimates that they'll be paying these accountable care organizations over $500 million over 3 years. I took 440 pages of junk that the way the government issued it, and I turned it into a Word document. I put a table of contents on it. I put an index on it, and I got rid of all the acronyms. There were 8 to 10 acronyms on the average page. So if any of you want a copy of that, just let me know. All right, back to those tax returns. Bob Panoff, thank you very much.
Thank you.
Copies of this webinar will be on our website, or we can send you the link if you want to share it. And I really appreciate everyone's participation.
Good night, all.